Okay, so I think we'll find out from our various speakers, but on behalf of the Southeast Region Row Crop Initiative team, this is our fourth meeting update, and so far we've been had good results. Just want to make sure that everyone that's on this morning, if you have a question, please go to the chat. Our other co-hosts this morning are Matt Boucher is not going to be able to be with us this morning, but we have some special things happening this morning. So on behalf of time and all, again, we want to thank all of our sponsors, Texas Corn Producers Board and the Cotton Board and the Texas Sorghum Producers Board. So again, thank you to y'all for supporting our effort. So again, if you have any questions, please put them into the chat. So with that, I'm going to turn it over to Dr. John Robinson, our cotton specialist, and he's going to start us off this morning. So John, if you want to get after it, go right ahead.
All right, thank you. Mark Welch is going to be driving my slides for me. Here they come. So we're past a normally very important benchmark report in what was the August WASDE, we call it, the World Agricultural Outlook supply and demand numbers. Historically, the August report has been important because it's the first time that USDA goes out in the field and counts squares and bowls, but it's important to keep in mind that this year, for the second year in a row, they didn't do a complete field survey of cotton. They only did a little bit in South Texas, and the main benchmark report is still coming. It's coming in September. I'm saying all that to say that there's a lot of questions about the production estimate that came out in this August report. So if we flip it to the next slide, I'll show you exactly what I mean. The far right column, we're talking new crop numbers, 2021. The real question was that production, the fifth line down there where it says 1808, that's 18 million bales of estimated production. And nobody was expecting that. Where we were a month ago was estimated 17.5 million. And everybody thought, including myself, thought it was going to go down. We thought between the hurricane damage in South Texas and hot, dry weather conditions, particularly in July and continuing in August in northwestern Texas, we thought that the number was going to be a lot lower, at least 500,000, if not 1 million bales lower. I was frankly expecting 16.5 million, and others thought it would be lower than that. But instead, the number went up. And again, this is based on really USDA conducting what they call a farm managers survey, which they did by mail, by phone, by internet, surveying growers what their yield expectations were. And the expectation is that there's more cotton than we thought. Now, that doesn't mean that this number is not going to change. I fully expect it. There'll be some adjustments. I don't know that they captured all the losses in the Rio Grande Valley, which are something approaching 300,000 bales to that hurricane. And I don't know that they've accounted for all the abandonment and low yields that are a result of hot, dry conditions in West Texas. And I think that, again, could still take 500,000 to 1 million bales off of that number. But I don't know that it's going to matter that much to the bottom line. If you skip on down to the very bottom where it says ending stock 7.6, now that is historically high. That's an increase year over year from the previous year of 7.2, and 7.2 was bad. 7.6 is absolutely historically terrible. We frankly should have futures in the 40s with that kind of a number, and especially if you consider that the world estimates were equally bearish, equally heavy, with low consumption, high production, and high and increasing ending stocks projected for the world numbers because of big crops going on in India and Brazil and other places. and because of what this pandemic has done to mildews. It's hurt it. So we've got a very high number down there. Let's say that USDA comes back next month and takes 1 million bales off the production number so that we have 17 million bales of production. They're going to lower exports probably a little bit, and that 7.6 million of ending stocks might drop to 7, or it might drop to 6.8. That's an improvement over 7.6, but it's still a terribly high bearish number. There's no reason for to project that futures are going to go up. Certainly, it's just a question. Maybe they won't fall as badly, but the fundamental picture as laid out by these numbers and how they're likely to change, in my opinion, for the next month or two, I think is bearish. And I think what we're seeing now are the last vestiges of a weather market, and maybe the best prices that we will see. And let me show you that. Flip to the next slide, if you would. The next slide's a graphical picture of the influence of supply and demand, this ending stocks, which is the green bars there. As ending stocks go up historically, prices, the blue line, has historically been weak, and that's just normal expectations of economics, and it fits the cotton market historically well, except for the last couple months. If you look at the extreme right end of that chart, the latest data in there, we have the green bars are going up, expectations, new crop ending stocks are going up, and yet you can see that the blue line, the price line, it's in a downward trend, but it's been ticking up. It's been ticking higher. There's a little bounce there, which that doesn't make economic logical sense. So let me explain some of those near-term influences. If you'll flip to the next slide, I've got another more recent snapshot of price data there. So you can see back into calendar, back to February. On the left-hand side is February. You can see the big effect on the market of falling prices from the panic of the pandemic, not knowing what it was going to do to consumption, but the expectations were it was going to hurt consumption. So we fell all the way to 48 something in the futures market, and then we started to see a recovery. What was going on during that initial recovery period was that the Chinese state-owned cotton buyers, that is, they're buying for the government reserve in China, they stepped in with these low prices and they started buying cotton. We started seeing that in our export sales to China. And we're still seeing it to some extent, but we're wondering how long it's going to last. But that phenomenon, them stepping into the market and buying, is what gave an impetus to this rally that we began to see. And we saw prices recover, and they continue to recover. And then we get into the growing season, and there's another influence. On top of the Chinese buying, there's speculative buying of futures because of the weather market, because of the hot, dry weather, because of reports of really bad conditions and potentially high abandonment. That did what it always does. It gets the speculators excited, and they get in the market and they start buying it up. And so you can see two little peaks there where the market tested 65 cents. The futures market ran up and bounced off 65 cents, and then it did it again. Now, the fact that it bounced off and didn't go through is actually, in technical terms, is kind of a sign of potential weakness going forward, that it didn't breach 65 twice. Another thing to consider there is, technicals aside, the time is running out on the weather market. I think a lot of the bearishness, a lot of the impact, not bearishness, a lot of the lift to the market that the weather market has given us, that's basically running out. There's little time left. You know, the conditions in the month of August are going to be important for setting yield potential, but after that, it's just a question of, you know, harvest conditions and tropical storms and things like that. But the real influence on the market from the weather is going to be fading. I think it's fading now. And so that spec buying, these two influences that we see here, they've lifted the market from 48 up to 65, but I think they're wrapping up their influence. Go ahead and flip to the next slide then. This is just a picture of the two types of speculators, and both of them have been buying. If you look to the far right, you see a little upward tick in the blue. Those are the people that are buying to hedge their portfolios of stocks and bonds. They're buying commodities. They're buying commodities because they think inflation is going up, because the Federal Reserve is essentially printing all this money in response to economic recovery, trying to stimulate, keep the economy from falling apart. And the expectation of that effect is inflation. And that makes these guys in blue step in and buy commodities. And they have been. You can see that uptick. You can also see an uptick in green. And that's the trend follower types who are thinking, well, there's a weather market. And, you know, it's not going to be 18 million bales of production. It's going to be 16 or 15 is what they think. And so they're trying to take advantage of that. And they're buying the market higher. But I think both of those influences are going to fade. Go ahead and flip. So where we're at is I think prices are bouncing off probably where they're going to get to their highest level. And I think those influences are going to fade a bit. And so I think we have maybe a few more weeks of this kind of thing before what I'm fearing is that cotton prices are going to start sliding and probably slide back under 60, and maybe potentially they could slide through the 50s if the demand picture continued to be weak and we kind of stabilized our expectations of what production is going to be. Flip to the next one, if you would. So kind of the logical, if you believe the story I'm telling you, then you would view these little runs to 65 cents as selling or hedging opportunities. I would look at them that way. And then if the market does begin to slide, then some of our government supports, those payment rates for LVPs and PLC seed cotton payments are going to increase. So that's there to help ease the slide. One more time, if you would, flip. Okay, so basically I have a bearish outlook. I think the best opportunity for the highest prices in the December contract, probably the March too, are what we're seeing right now. So I would kind of just leave that with you, Bobby. If there's any questions, I'll be happy to try to tackle them.
Well, there's not any in the chat box, Dr. Robinson. So I guess we'll leave it at that, and greatly appreciate you being with us this morning.
Yeah, thank you.
Good information. Sometimes not what we want to hear, but still information is very valuable. Next, we're going to move to Wayne Cleveland, Texas Sorghum Producers Board Director. He has brought a special guest for us today, and we feel fortunate to have him on board this morning. And I'll turn it over to Dr. Cleveland and let him introduce him.
Well, good morning. Certainly appreciate everybody being on, Bobby, this opportunity. You know, I think everybody's got their head down on the farms, and kind of as grain sorghum goes, Dr. Lomar, when everything else is good, we're bad, and when everything else is bad, we're good. So I think this is a pretty classic example. If Dr. Lomar, I'm going to give him all the time that I have. I think you guys will be extremely interested in what he talks about. Brian is he runs the China office for the U.S. Grains Council, which is the equivalent of Cotton Council International. So in 2014, Dr. Lomar basically, for lack of a better word, just kind of opened up the sorghum market in China to the U.S., jumped through a lot of hoops, did a lot of work, put a lot of seminars together that a lot of us attended, and that's when that market really broke loose. And Brian's done a lot of work there. He lives in China. He lives in Beijing now. Not now. He's kind of stuck in D.C. because of the COVID. His wife is also there in China and a banker. So Dr. Lomar spent time with Bunge as an economist with USDA ERS. He now works for U.S. Grains Council. Their activity basically is to market U.S. grain, sorghum, corn, and barley, and all overseas markets, of course, now with all the focus on China. But Texas Corn Producers also is a part of that organization. They do a lot of really good work, have offices all over the world. So Brian, I hope I did you justice, but Brian's also a pretty good guy just to hang out with and visit. He can take really complex information and delineate it where a guy like me can understand. And you guys on this that know me know that's a pretty good chore. So thank you, Dr. Lomar, for joining us last minute. And as always, I look forward to your very cerebral comments about China.
Well, thank you, Wayne. I hope I do justice. And thank you for the kind words about our efforts in China, but it was a team effort, Wayne. Certainly, Texas grain sorghum producers were very instrumental in our efforts to build the market in China in 2013, 2014 in particular. So thanks for your support. And thank you all for your support. Wayne mentioned it's kind of last minute, but so I don't have anything really prepared, but I'll just talk a little bit about sort of what's going on in China right now. China has really high corn prices. It's sort of perplexing because everyone expected corn demand to be low this year with the the spread of African swine fever through the swine inventories, which are down significantly. But what seems to have happened is that because of African swine fever, the swine hog producers are switching to higher quality feeds that are not using hulls and husks and recycled food waste and things like that that are perceived, and probably are, a vector for African swine fever. So that's caused the corn share of feed rations in swine to go up. And that's had a very significant mitigating effect on corn feed demand. In fact, it'll probably go up this year versus last year. And then as the swine inventories are restored, you're going to see corn feed demand rise because now they're including 70% of their feed rations is corn rather than 50% as before. So I expect to see that go up. And these kinds of things are causing demand to go up, and supplies are limited and expected to be more limited in the future. The other thing that's happening is China had taken a bunch of corn off the market several years ago in 2012 to 2015 as part of a program to support prices back then. They stopped that program in the spring of 2016, started to sell the corn back to the market in auctions, and no one really knows how much corn was taken off and is sold back in. There are numbers on that, but they don't make any sense to me, and I'm very skeptical of them. But certainly they did take corn off the market to elevate prices. Prices dropped, corn prices dropped after that program, and by early 2017, they were hitting parity with imported prices. But corn prices have been rising in China since then. In the last 6 months or 8 months in particular, they've been rising significantly and are now at levels that we haven't seen since the corn price support policy in 2015. So you have really high corn prices in China, and that's creating huge import margins, and that's generating demand for corn and resulting in these high bases for sorghum. Corn is restricted, corn imports are restricted by a tariff rate quota in China. And so you have to have, an end user has to have a TRQ allocated to them before they can import. But sorghum, they don't need that. So there's very strong demand for US sorghum. And we've seen that, obviously, exports thus far have been very good. Forward buying has been less strong, and that's partly because ownership hasn't transferred to the exporter yet. A lot of the sorghum is still in the ground. A lot of it hasn't really been sold, but there's demand for the new crop coming in. The other problem that sorry, I got an email coming by. The other problem that sorghum buyers in China face is a little complex, but what's happening is, and the gentleman before me talked about the state-owned companies buying cotton, and I imagine that's partly due to not just low prices, but also the commitment in the phase one deal, the trade deal with China. And the state-owned company, there are several, but there's one that's been buying the corn. And they bought significant amounts of corn, almost 6 million tons of corn for the 2021 crop year. And we all expect a lot of that to come in September, October, November, December, because they're using the 2020 tariff rate quota to buy that. And so they have to bring it in by the end of 2020. Those imports are making over $100 a ton import margins. If you don't have to pay the retaliatory tariffs on corn, and corn prices haven't gone up like sorghum prices have, you're making an enormous import margin. So the private enterprises that are importing the sorghum are concerned that this corn's going to start coming in. If they contract for sorghum right now at the high prices that are being offered to them right now, and then in the spring, a bunch of corn comes in from a state-owned enterprise where they're making over $100 a ton import margin, they can undercut any prices that sorghum importers are selling at. They're concerned about that. So they're wary about buying at the current price levels. And how this will all unfold, it's not entirely clear. I think everyone's going to have to kind of come down in their price expectations a little bit, including the suppliers in the U.S. But the sorghum's going to move. The prices are very high in China, and I think it's ultimately going to make its way to China. The question is what price level, and then how much of that the price premium will go to the farmer is another question. So those are the two things that are kind of holding up forward sales of sorghum to China. But I expect it will all be resolved in the next couple months, and the sales will occur very quickly after that. And that's kind of my overview. I'm happy to answer any questions.
Brian,
Wayne,
can you talk just a little bit about the political situation in China right now? Is that feasible? Advisable?
Yeah, well, no, I mean, well, okay, I'm in DC. So first of all, I'm trying to, visas have all been canceled or suspended. And so I have to get a new visa. That's a long, complex story, and I won't bore you with it, but I'm working on that. The political situation, I mean, that gets very complicated. There's a lot going on. China's definitely committed to maintaining the phase one deal, the trade deal. And that seems to be the string that's holding the bilateral relationship together right now, really, is that commercial relationship outlined by the phase one trade deal. And I think both sides are clearly aware that agriculture is the most important component. Agricultural exports to China are the most important component to maintaining compliance with the phase one trade deal. So there's that. But then there's all the other stuff, Hong Kong, South China Sea, relationship with the U.S. And it seems that both sides have been very cognizant of taking this complex relationship that the U.S. has with China and segmenting it into, okay, we've got tensions over here, but we've got this component that's working over here. And the component that's working over here is the phase one trade deal. And then you've got the general politics in China. It's how to keep the economy going, bouncing back from the COVID shock. And that is a mixed bag. A lot of people see a V-shaped recovery. Things like retail sales seem to be bouncing back. Hotels, air traffic, all that stuff seems to be bouncing back. There's a conference tonight, tomorrow morning, and Thursday morning in China that will be held in person. And it's a large conference. We sponsor it. Folks from from the sorghum industry in the U.S. have attended it in years past. So that's a sign that things are kind of getting back to normal. But there are a lot of headwinds. There's still a lot of debt that China's trying to resolve. It's trying to pull out of this recovery without taking on more debt, trying to crack down on shadow banking and other mechanisms that local officials as well as enterprises have used to boost economic growth at the expense of by borrowing money and putting it into the economy. There's also believed to be a lot of unemployment among rural workers, particularly ones that would migrate to cities to work in factories or in service industry there. That's not measured as part of China's official employment statistics, and that could be very large. So there are concerns about how effectively China is bouncing back and how well the economy is bouncing back. And as is common in China, it's really not entirely clear. I'm not in China right now and on the ground, so I don't have a real sense of it. Like, when I ride my bike around, do I see a lot of activity? But what I've been told is that activity, even in Beijing, which is one of the cities that's been more locked down than others, activity seems to be bouncing back. So I don't know if that answers your question, Wayne. I'm happy to answer anything more specific.
I think so. So, you know a lot about producers as well, and certainly market security and, pricing points and, market, do you see that market as highly unstable in China, or kind of unstable, or very secure as far as U.S. products?
Yeah, the demand is there, and importers, as you've met them, they want to import U.S. sorghum. They really like U.S. sorghum, and they could import 2 times U.S. production if it were available, and would enthusiastically do that. Really, the question mark is the U.S.-China relationship, and then how these significant corn imports are going to affect the market. And that is uncertain. I mean, and so I wouldn't call the market unstable. It's just the relationship between the 2 countries right now. It's not clear how it's going to go. I've said that I'm 51% optimistic, meaning, I'm optimistic, but just barely. I think it's going to hang in there. And I think the commercial relationship is so strong and important that, one, it'll take a long time to if there's real movement towards disengaging entirely economically with China, it'll take a long time to do. There'll be a lot of interest in the U.S. and in China that will resist that. And it's not clear if the political winds are really going to push that far. But that's the concern, is the political risk, I would say. Does that help? Which is not giving you a direct answer. I'd say it's a stable market. It's just the relationship, it's not clear how that's going to unfold.
That works for me.
I have a question. Has the swine market begin to rebound? Or, I mean, the swine production, has it begun a rebound there?
It appears to have. There's a lot of statistics in China, and I tend to take them with a shaker of salt. But, live hog prices are still very, very high. But they've edged off their peak. And I would say, yes, it was beginning to recover. The floods in the Yangtze Basin and in central China have probably kind of been a kick in the gut to the recovery of the swine industry, both spreading, facilitating more spread of African swine fever, and then the direct effects of disrupting deliveries of feed supplies and things like that. But other than that, yeah, it seems like the swine industry is recovering slowly, but recovering.
Wayne, I'm not seeing any questions in the chat. Dr. Lomar, we greatly appreciate you being on with us this morning. It was a pleasure to listen to you, and greatly appreciate you supporting our effort. And if we can do anything on our end for y'all, let us know.
Well, I appreciate it. Your support has been very much appreciated in China. Joint activities with Texas Grain Sorghum Producers. We have joint activities every year in China, and really appreciate that support. I'm hopeful that this will be a very mutually beneficial long-term relationship with the feed industry in China.
Again, thank you, Mr. Cleveland. I think you wanted to say just a few tidbits of information right quick. And
if I could have a minute, see if I could. Yeah, certainly any questions for Dr. Lomar. If I could do a screen share, Lindsay, real quick. I've got a slide here that I'd like to pop up.
You should have the ability to do that, so feel free to.
There it is.
Yeah.
Can you guys see my screen? Okay, this is just something we put together for our China customers. We had an online session with them, and just for you guys marketing purposes, certainly the questions we get. And last night I started getting texts late about the bids at the port. Just went crazy yesterday. Here gives you an idea of a breakdown of the production in our state. As far as this is just a pure 5-year average, so you guys can see those. The box to the upper left is the 5-year average, and you can see the High Plains is right at around 32 million bushels. You can see down there where you guys are, you share roughly about half the grain sorghum produced in the United States as well. Those averages out towards the physical location of Texas are what we think is there this year. And then there to the bottom left is the 5-year average is 87 million bushels, which is roughly 2.1 million metric tons. I will tell you last week that China purchased roughly 10% of the United States crop production in 1 week. That was, of course, old crop and new crop put together, but to kind of give you some idea of the veracity of the way that those guys are purchasing. So I think if you looked at bids today, you'll see that it's kind of commensurate with what's going on in that market. But mostly I wanted to point out to you guys that are still holding on to grain that High Plains crop has not made like it should have. I think they probably lost 70 or 80% of their cotton. I think we picked up about half of that in grain sorghum acres, picked up a lot of irrigated grain sorghum, but I think the High Plains crop will be below average, which that comes off a little earlier than the Kansas crop. Kansas has a bumper crop going, so you guys can kind of see a window in there if you're still hanging on to it. But the second slide I wanted to show you guys, and I can certainly share this if you guys are interested. This is using NAS numbers. These pictures were taken last week on the High Plains. The first one was taken around Amarillo, or the one to the right was taken around Amarillo. I don't know, extension agronomist, our old extension agronomist must carry hammers around for scale or to protect themselves or something. I don't know how extension works, Mark. But this is a picture Dr. Brent Bean took of a variety. This is not experimental with a hammer. This is just a normal variety under irrigated conditions there with obviously the correct heat units. The picture on the left, this is Kevin Shigoda. I think he's probably 6'3" or 6'4". That grain sorghum behind him is a variety that was brought in from the Bahia of Mexico that routinely produces over 10,000 pounds annually. The one in front of him is an experimental variety. Both of these are supported by the United Sorghum Checkoff Program and Texas Grain Sorghum Producers Board. You can see under the extreme adverse conditions that have been up on the plains that our research continues, that there is some really promising varieties out there. Of course, Alta introduced their over-the-top resistant grain sorghum about a month ago. We think the other 2 or 3 companies will have similar varieties, but I wanted you guys to see that there is some hope in the sorghum world as far as production. I hope you guys had a good crop, relatively little sugarcane aphid pressure. Everything seems to have worked pretty well this year. But again, I wanted to just end on this note right here and to let you know that it's still out there. The trisomy is still out there, the tri-seed. Just having a hard time to get it not to lodge whenever you got that big a head on it. But this is not trisomy. These are other varieties that Dr. Brent Bean are taking care of. So, Bobby, I'll stop right there. If there are any questions, I'd be happy to take them. You guys have my cell phone number. Please feel free to give me a call. There's a lot going on. Again, I wanted Dr. Lomar to come in and talk about China. It's going to be there. And again, to reiterate his comment was, same thing he tells everybody, and the Chinese tell us, is we could buy 15 million metric tons, which is roughly twice what we produce. So we'll continue to work on that market. We have grants through TDA to go back and work in that market. Again, this week, the JCI conference is going on. We're usually at that. And U.S. Grains Council has been a great partner on all that. If you have any interest in any of this stuff, give me a call. Or if you have any questions, give me a call. Otherwise, Bobby, thanks for the format.
Well, thank you all again for being with us this morning and giving us a view into some of the things that are happening in the grain sorghum world and in the China market. And we greatly appreciate the support and your efforts on behalf of our producers, our sorghum producers and corn producers in this area. So with that, I have just one comment here. It was a great presentation this morning. So we'll go from there. Dr. Welch is our next presenter up. Dr. Welch is our state grains marketing specialist, and I'll turn it over to him and he can finish up our morning.
All right, Bobby, appreciate that. Just real quickly, I'd like to go over just some kind of broad market indicators for feed grains in general. Really enjoyed that discussion, particularly on sorghum and some of the details that are going on there. And like to now maybe put that in the context of what's going on more broadly when we're looking at feed grain prices and feed grain production. Last month, we put this slide up with in full anticipation as we headed into the August WASDE report. USDA was going to increase that corn yield again. We were already at record yields starting out the expectations for this year, and the idea was it was going to get bigger. Well, then, of course, we had this. Right after the WASDE numbers were gathered in early August, before they were reported, the windstorm moved across Iowa. Certainly there's going to be an acreage as well as a yield impact when you have a major producing state hit like that. However, there's conditions that are really good in other parts of the country, likely offset some of that. But so these are some of the factors that we're still trying to account for as we go through wrapping up this growing season, particularly in the corn market. These are USDA numbers in the August WASDE, holding acres at 92 million planted acres, 92 million. That's in the top 5 of the last 15 years. And then, of course, that yield at 181.8 prior to any adjustments that's going to come because of that windstorm that went across the Midwest. When USDA raised that yield from about 178.5, went to 181.8 bushels per acre, that added production almost 300 million bushels. A little smaller carry in. The bright spot on that August WASDE was demand. Feed use was up. Exports were up. And so with those increased estimates, it moderated some of that production increase, still had an increase in our carryover of about 100 million bushels. And that stocks to use number, I like to use days of use on hand, around 68-day supply of corn. And if we look at a 68-day supply relative to what that does to our price expectations over here on the y-axis, we're pretty far out here to the right. And so here's where we were in 2019 with about a 60-day carryover. Now the current estimate from USDA, again, prior to those adjustments based on production because of the windstorm, we're still way out here in the high 60s. So it would take a major change in supply to shift us significantly back to the left on that stocks to use level. So even if we do some adjustment, I think the price impact is likely to be relatively moderate over the broad range of season average farm prices paid to farmers here in the U.S. So we're still pretty far over here to the right with our current estimates of a stocks to use number of that days of use on hand. So let's say that 181 does not hold, and say we come back to a harvested per acre yield, say about 178. That would still be up in record territory. And what I'm trying to do is come up with a number that takes that 300 million bushels back off the balance sheet. And so if we were to do that, and that seems reasonable given the kind of damage and some other impacts we're seeing around the country, let's say we get that yield back down to 178. That means our production back down to about just below 15 billion bushels. But I think this is what's the most interesting part of this whole exercise. If you look at the demand picture one more time, the blue category, these were USDA's most recent projections for the old crop marketing year, total use for corn, 13.6 billion bushels. Their current estimates for the new crop year are up 1 billion bushels. That's a pretty significant increase. And of course, there's a lot of factors have to hold, the improvement in the economy, trade relations and trade opportunities like we've talked about, the ethanol industry recovering, feed demand continuing to hold, a lot of pieces involved in that. But the underlying demand base reflected in the August WASDE was very, very positive. This is where we started these programs back in May. Of course, the effect of the big acres, expecting of a big crop, the coronavirus, dropped that December contract down in the high 320s. We were hoping that was some kind of bottom in the market. And just based on some technical retracement, set maybe some price objectives out here for us. And this was my long-term, where I thought we would be at harvest as we get to mid-October, about this 340, 350 range for futures. As we went into June, we're starting to see a little bit of recovery. Perhaps that bottom is going to hold. Got into July, maybe a few marketing opportunities. We hit some of those targets that we had set. Looked pretty good. And then we came into August after the August WASDE, reset new contract lows down to 320. But now I'm seeing perhaps some degree of a rebound that might give us a shot based on yield expectations to yet maybe achieve some of these targets. So that's if we were to see some of these, be able to, if you've got some grain on hand, I think there may be some opportunities here. And if we even go beyond that, this starts to look at opportunities to price that 2021 crop. Acres are higher. The yield question is still out there with us. Use is up. And I think that's the bright spot that came out of the WASDE. We do look at a stocks to use ratio that's in the highest range we've seen since in this biofuel era. We've got to go back to 2005 and we're still beyond those. So generally speaking, lower prices compared to last year, and how long and that we suffer under that will much depend on the recession impacts, the recovery of the global economy due to the coronavirus, and then obviously opportunities even within all of these disruptions and uncertainty to take advantage of trade, and of course then weather, which is always the dominant factor as we look at agricultural production. And transitioning to that, we are officially under a La Nina watch. These are sea surface temperatures on tri-monthly averages. If you get those out in the Pacific, 0.5 degree centigrade cooler than normal, this would be the La Nina zone. And the latest readings on that is we are right on the cusp of entering into this La Nina territory as we move into fall. The current estimate is it will bottom out in November, December, January, but linger into February, March, and April. Of course, that has significant impact on the southern high plains. If you look at warmer and drier conditions or forecast from January to April, when we see those La Nina conditions, it tends to affect our friends down in Argentina as well to a negative category in terms of crop production. Those that have the opposite weather pattern increase in precipitation would be, of course, Australia, and then also primarily in South Africa. But as we move toward, if that weather pattern holds, the tendency or likelihood is for a warmer and drier season ahead of us. What does that mean for sorghum yields? Well, La Nina doesn't mean disastrous conditions every year. The red bars indicate La Nina sorghum yields in the coastal bend, Corpus Christi area, following a La Nina winter. And there are some pretty decent yields in there, but obviously with those La Nina conditions are associated with some of the smallest crops we've seen going back to 1990. And on average, a sorghum yield after a La Nina winter would be about 10% below average. So the likelihood of some challenging agronomic conditions are ahead of us if there are some factors in our risk management programs, crop insurance specifically, that we can start doing to account for that. Just wrap that up. There's my contact information. Holler if we can help within this information. Really excited to work with our commodity and our other sponsors for a Master Marketer program. We're going online starting at the end of September. You can go to Master Marketer at TAMU and find our full schedule. Contact any of us here on campus. I think Bobby will be getting information out to you guys as well. But the sign up is open. It's online. We're going to do 2 hours a day for 4 weeks in a row on Thursdays. So 10 to noon on Thursdays in October for this program. There is no cost, but we will ask that you register so we can keep kind of who all's attending that with us. But excited to share some opportunities around our Master Market program. And again, our corporate partners, just like the Sorghum Producers Board, is a great supporter of this program. Cotton Incorporated, Wheat Producers, Texas Farm Bureau, couldn't do it without them, and look forward to sharing with y'all. With that, I'll stop, take any questions, and good to be with you again, Bobby. Thank you much.
Again, thank you. As of the moment, we do not have any questions. Just want to let anyone know that this has been recorded, and we'll try to get it out in a very prompt manner. So feel free to share it or tell people where to find it, and I'll be putting it out on Twitter as well. So there'll be places that you can find it. So if you enjoyed the program and this morning, just ask that maybe you spread the word that the information that's being given and hopefully can help marketing of crops. Again, thank you to our sponsors. Thank you to Lindsay. Don't see her, but she's the one driving the bus, and we can't do it without her. So again, thank you, Lindsay. To Dr. Welch, Dr. Robinson, Dr. Lomar, Wayne Cleveland, and our sponsors, the Cotton Board, the Texas Corn Producers Board, and the Texas Sorghum Producers Board, we thank you, and I guess we're done.
Thank y'all very much.
Lindsay, you want to